The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, as we wrapped up the trading week on Friday, we saw the trade a little bit mixed with some pressure in beans and corn. The wheat trade was a bit higher, a decent day in livestock. So an okay end to the week, but really this market overall is just feeling kind of choppy here. Maybe it's the harvest doldrums already setting in. We're going to talk about all of that and more. Joining us here on Market Talk today as we recap the week of the trade, we welcome in Ted Seifried with Zaner Ag Hedge. Ted, it's good to talk to you, buddy. How are you?
I'm doing great, Jesse. Thanks for having me, man. You know, I enjoy doing the show.
Well, and I appreciate the time. And to what I was mentioning there, Ted, it feels like, we had a big week. We had that WASDE report and we've had some economic data out and everything else. But man, we keep kind of trending sideways, especially the corn market. I feel like, 480D's corn's been here for a while. So I guess what's your assessment here overall as we wrap up the week and we're at the middle of the month of September? I mean, just feels like things have been quiet and choppy. What's your perspective?
Yeah. And so, I kind of feel like, Jesse, this is corn sort of lulling people into a false sense of security. That's really kind of my feeling, right? We had been kind of building this sort of wedge pattern, which is a consolidation pattern ever since the middle of August, kind of waiting to see, what's going to happen with yields with the hot, dry weather that we had at the end of the growing season. What is the USDA going to say on that September WASDE report? Is that yield going to drop dramatically? The trade guesses weren't actually calling for a dramatic drop in yield, but there was a lot of people out there in the Twitterverse and so on, or Xverse now, whatever, out in social media, suggesting that there's going to be a dramatic drop in yields for both corn and soybeans. And then you didn't get that on that report on Tuesday. In fact, with the increased acreage, production basically treaded water, and you had a carryover go up just a little bit. Production was slightly higher, and you had a carryover go up a similar amount. And so we broke out to the downside. We broke out of that wedge, right? And so that's a bad sign. However, we were able to bounce on Wednesday because we were bouncing off of what I'm going to call contract lows in December corn. They're technically not, because if you go back like a couple of years, December is always a weird contract, Jesse, because we start trading those like 3 years in advance, right? If this was like a March or contract or really anything other than December, this would be contract lows. But again, because of the longevity of December contracts. So what I'm going to say is that since the volume has really come into that December contract, a year and a half ago, this is the new low. And we did it just by 0.25%. And then we bounced off of it, trying to defend that, But really, that Wednesday trade, that higher trade, has since been kind of proven to be more or less just a dead cat bounce. And I'm very worried that we're going to take out this 470 level in December corn. And if we do that, then we start this next leg lower, because again, after all of this consolidation, trading sideways for roughly a month, you could almost say a month and a half, there's a lot of pent up, aggression is not the right word, but there's pent up energy here, right? Yeah. And when that energy starts coming back into the market, moves happen. So I'm worried about where we're going to be before we go into that October report. Maybe that October report does give us a different outlook on what yields are and balance sheets and everything like that. But we've got a ways away to get to that. And export sales aren't exactly making us feel warm and fuzzy about the USDA's demand side of the balance sheet.
No, not at all. And I was going to say that's the other piece of this puzzle. I mean, China's not buying U.S. corn, really. I mean, nobody's really buying U.S. corn right now. And so that demand picture, at least specifically on the corn side, is still very ugly, Ted.
Yeah, it just really doesn't feel good, and I think a lot of analysts, myself included, have been saying for a while, like there's a lot of demand on the balance sheet, the corn balance sheet, that it's really kind of hard to justify. And look, we just started this marketing year. There's a lot of time left. Things can change. But unfortunately, there's really only two ways to go find that demand. One is a catastrophic event in South America during their growing season. Possible. The other is low prices go and find demand. The problem with that, though, is that it takes a lot longer to find demand, to regrow demand, than it does to destroy it. And we've spent the last 2+ years really working on demand destruction. And we're seeing it, kind of on a daily basis, or especially weekly basis when we see the export sales. I think ethanol is really the one shining spot. I like the ethanol industry, the ethanol number that the USDA has. That's the one category that I think may be able to go higher, but feed and residual to me seems real lofty compared to what we've seen the last couple of years, and knowing how many animals we have out there right now. The export number, just every week you get kind of reminded that, ooh, man, I don't know if we're going to get there. I don't know if we'll get close to that. So the unfortunate reality is that, even if we do get a pretty dramatic drop in yields in October, which, by the way, in September, the corn yield ends up being pretty close to what our final yield is. It's a different story in soybeans, but that September yield that we get from the USDA, there's really not a huge variance between that and the final number. Usually, I mean, it's really unprecedented for that number to be dramatically different. But let's say it is. Let's say we drop it 3 bushel an acre, which is roughly 250 million bushels of production. Man, that even if I leave demand unchanged, that barely gets me below a 2 billion bushel carryover. Yeah. And I wouldn't be able to leave demand unchanged in that scenario. The math just really, it's becoming almost impossible for the math to work out for something to give us a tight balance sheet in corn without something absolutely major and unexpected changing. And again, South American weather could be it. China could just decide to buy everything because they're getting ready to invade Taiwan and they just want to stockpile. That's a possibility. Although I'm going to argue, Jesse, they've been doing that for a few years now.
I would agree. Yeah, I would agree on that one.
The thing. Unforeseen events can happen. But until something changes, I don't know. It's really hard to get excited about corn at this point, even with a lower yield.
Yeah, and I want to ask too. I want to talk soybeans here in a minute, but with the case of corn, can wheat potentially maybe hold up corn to some extent here in this window, Ted? What do you think?
Yeah, maybe.
And I'm not thinking it's going to be like a big thing, but at least maybe hold it somewhat steady and at least keep the bottom from completely falling out of us here.
It can be a positive influence, Jesse. But see, here's the thing. We see corn and wheat kind of trade in tandem sometimes based on the idea that there is some component of wheat demand and corn demand that is a little bit interchangeable, and that's in the feed category and to some extent the ethanol category, but it takes a lot of time and effort and infrastructure and expense to go from corn as a feedstock for ethanol to wheat as a feedstock for ethanol. I don't see that happening, not in this country anyways. So it really comes down to the feed category. And on the balance sheet for wheat, there's maybe 50 million bushels of feed that could transfer from wheat. If wheat prices were to start going higher, maybe corn gains 50 million bushels of demand coming from higher priced wheat. To me, that's not really enough to move the needle to the point where I can say that corn can be a floor underneath corn based on higher wheat prices, right? It might soften the blow a little bit. I just don't see that being as a. I think if we're expecting wheat to save the corn market, I think we're really pulling at straws at that point.
We're talking with Ted Seifried from Zaner Ag Hedge here today on the show. Ted, I want to talk soybeans, tighter balance sheet there, some different fundamentals and technicals to consider in this soybean market. Kind of the same situation though. Demand's not overly great. We've seen a little bit of business here as of late, but I mean, soybeans, the WASDE numbers we got, that yield came down a little bit. Still, I don't know what to think here in this soybean market. Plus, to throw in the fact that a lot of farmers are talking about selling beans off the combine and storing corn at this point. So I think that could have an impact on this market moving forward.
By the way, I think that's a terrible idea. But yeah,
yeah. I always shooting it straight, right?
I mean, unpriced. That's I mean, look, set a floor. Just a side note back to corn. I mean,
Yeah.
December 460 puts earlier in the day on Friday were going for about 8 cents. If you can do that, if you go in and you put a floor on for the next 70 days at 460, which is really only about 15 cents from where the market is right now, then fine, go store your corn, but definitely have some sort of protection to the downside. Because if this really snowballs to the downside, if we take that next aggressive leg lower, oh boy, store and ignore is going to be a big problem, especially for the high input costs that we paid last fall. I mean, this was one of the most expensive and one of the most high risk corn crops we've ever planted, Jesse. Just turning your back on prices because you don't like them is a terrible idea right now, in my opinion. So please don't do that. Have a plan, have a strategy, have protection in place. This is the time to be doing that. The last couple of years of high prices have kind of lulled us into complacency. This is, I mean, we're seeing a call to action really weekly from the corn market. So yeah, that's my rant on corn. For soybeans, to your point, the yield came down a little bit more than expected. And the acres didn't increase quite as much as expected. So you had a lower production number than what the average trade guesses were, which at first glance was like, hey, that could be pretty friendly. But then we flipped to the carryover number. And carryover came in, well, like you said, it was lower by 25 million bushels, but it came in above the trade guesses. So when you have that combination with lower production and a carryover that didn't drop as much as what most analysts wanted, well, what's the culprit there? It is the USDA cutting more demand than what most people thought were possible. In particular, that 35 million bushels of export demand coming off. That's what's really given the soybean market a very sour taste in its mouth. That's why you had that 25-cent lower reaction on report day. And it's also why on Friday you have a big outside reversal down day after a real dead cat bounce off of an attempt to hold the 200-day moving average. Real bad price action and chart activity this week, Jesse. I'm very worried about what the soybeans are going to look like next week. But you do still have two sides of the story in soybeans. You do have the argument of, well, yields could come down dramatically in the October report. And while it's not historically, the odds aren't high on that, right? But listening to what's happening with guys going out and harvesting beans or whatever. And keep in mind, I mean, a lot of times, most of the times in years like this, when we're really dry, we're going after the worst fields first. They're the driest, they're the ones that are ready first, right? So I don't know. I think you got to take some of the early combine results with a little bit of a grain of salt. But if we continue to do this for the next 3 weeks and the USDA's field plots change dramatically for when they compile that data going into the October report, maybe you do have a fairly dramatic drop in soybean yield. And the soybeans are still in a position where you could have a fairly tight balance sheet. However, again, demand is now the concern, right? So you have issues with the river for the next 3 weeks, or really kind of for the foreseeable future. That isn't catastrophic, but it's again coming at a time of the year where we don't have a whole lot of beans at the ports. We need to move the new crop beans down. That looks like it's going to be a bit of a struggle. It's going to be slow going. We'll get them there, but it's going to be slow going. And I think that's part of the reason why we had a really kind of disappointing, in my book anyways, disappointing weekly export sales number last week. I think both your exporters and your global importers are looking at the rivers saying, hey, I don't know if I want to deal with this mess right now. Let's just wait and see how this plays out over the next couple of weeks. And so you kind of cut short our export window a little bit on the front side. But then you've got Brazil planting 2 to 3 weeks early because they've got good soil moisture and they got good rains during their dry season. They're a little bit worried about that second season corn crop because of the El Nino, but they're full go on planting their soybean crop early.
This weekend.
They'll probably be harvesting early, which means you can cut our export window by 2 to 3 weeks at the tail end of our export window. So our export window is shrinking on both sides, Jesse. And you can almost say we're going to lose a month of our normal export season. And if you do that, I mean, That's 150 million bushels potentially. Now, I don't think we lose those 150 million bushels, but it goes a long way to justifying the 35 million that the USDA took off the balance sheet. And you could say, well, if they do have to lower yield some, there might be some more room there. But again, it really depends on how much that yield, if any, comes down in October. There still can be a story there, but like we said in corn, we've got multiple weeks before we even get to that. We have to trade the balance sheet that we have right now. And that disappointment that we experienced from that report of that yield not coming down as much as what some people wanted it to, and the carryover certainly not coming down as much as the trade was expecting, again, that's leaving with some bad price action and a chart that is looking like it is throwing some red flags in a big way right now.
Talk to me about crude oil. I'd love to get your perspective on this. $91 a barrel crude oil seen on Friday. Traditionally, I feel like crude can be supportive, especially the grains and oil seeds. But what's your thoughts with where this crude's at right now?
Yeah, so like we said when we were talking corn, ethanol is the one thing that's the bright and shiny spot of a corn balance sheet. That's the one category that I really like, and a big part of that is because of the strength in crude oil. And just energies as a whole, right? So that is good. We've got expansion. We're pushing renewable aviation fuel, which that is a good thing for ethanol and a good thing for biodiesel, soybean oil. Soybean oil is another one that I'm friendly on. And I think crude has more upside potential. I was kind of thinking we'd get to about 104 in crude as we get into mid to late fall. We're kind of headed there pretty soon. I think we will start to fall off a little bit once we get into the winter months, unless it's like an absolutely dramatically cold winter and that heating oil really takes the lead. But I like crude. It's a very well organized uptrend. I think the fundamentals have been fairly bullish for crude for a while. And we're finally seeing that, come to fruition basically since the end of June. And again, I think there's more room in the tank. Now, that being said, in the short term, we're getting rather overbought, almost at 80% of the relative strength index. If you're looking at it from a speculative point of view, I would be looking for a bit of a pullback. I'm kind of hoping that we get into like the 86 range on that OC crude, which is where I'd be a little bit more interested in it. It's just a dramatic ask. We're asking $4 or $5, or basically where we were mid last week. But no, I think the crude fundamentals are pretty good for now. The big concern, obviously, or any time with crude oil is what happens if we head into a bit more of a recession, into a deeper recession or whatever, which there are some pretty significant concerns about that as we head into fall and winter months. But those concerns were there last year, and it didn't really happen. People went out and spent a whole lot of money on the holidays, were eating out at restaurants and everything like that. If we do that again this year, then I don't think you have to worry about it so much, Jesse.
Ted, any thoughts on the protein sector, cattle and hogs? I know this cattle market just continues to impress in many ways. What's your thoughts over in the livestock trade?
Yeah, a good transition, Jesse, because a lot of what I just said about crude oil and the fears of a recession going into the holidays and things like that, if that were to come to fruition, that would change the whole outlook for cattle in particular. It actually might be a somewhat of a positive thing for pork and for hogs. But as long as we don't get into this period of time or this fear where people stop spending money on higher priced items, and in particular, higher priced beef items at the grocer's counter, I think things look good. We know that, and we have known for a long time, that Q4 and Q1 of next year supply of fed cattle is really, really thin. And we're heading into that, right? So we're seeing the realization of that right now. And so I do think there's more upside potential. There is a question of, well, at what point is price just get outrageously too high? And then some people will argue that now. I don't know. We didn't see that summer doldrums kind of seasonality. We're now heading into a season where we tend to see box beef prices improve, and I think the setup is there for some higher prices. But at what point is high enough? I don't know. I've always been kind of targeting the 90 to 94 area, but now that we're sitting really just under, we're there.
Yeah.
So I don't know. I guess maybe I'll raise the bar, but we're kind of in uncharted territory, Jesse. We really don't have a whole lot of context as far as charts are concerned to say, well, here's my next major area of resistance. I don't know. I guess psychologically there's 200. That seems so lofty, though.
Yeah, it seems very, very lofty. It's one of those things that we're just gonna have to sit back and grab our popcorn and watch. I think to some extent here, Ted. Before we let you go, buddy, if folks want to reach out to you and get some advice, I know they can get a hold of you very easily. How can they contact you, Ted?
Yeah, absolutely. You can reach me directly at 312-277-0113. That is my direct line. Aside from that, you can find us on the web at www.zaner, that's zaner.com. I'm also doing afternoon commentary. It's about 5 minutes, and I'm just doing a rundown, mostly the grain markets. I'll throw some livestock in there if I think there's something interesting. It was just the point of it is to be really quick and just a quick hit, just a summary. You can sign up for that. And then aside from that, you can find me on Twitter. I'm at the Ted Spread. I like to have fun on Twitter.
Well, we appreciate
X.
X, yes, whatever whatever it's called now. Well, we do appreciate the time as always, and wish you a happy rest of your weekend here. Ted Seifried, Zaner Ag Hedge, thanks for joining us today on Market Talk. We'll have you back on soon.
Awesome, Jesse. Thanks so much. I always love doing it.
That's going to do it for the show today. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.